I'm Greg Hunter. Welcome to USAWatchdog.com. With us, a regular guest of mine. And in 2013, he wrote this book. It said, The Coming Bond Market Collapse. I'm kind of tipping it off already. He's an economist. He's a money manager. He's an expert on the bond market. And everything that was written in this book from 2013 is coming true now. Very predictive, very forward-looking. I'm talking about Michael Pento of Pento Portfolio Strategies. Michael Pento, thanks for joining us today on USAWatchdog.com.
Thanks for having me back on, Greg.
I want to start with the Puerto Rican bond thing because I think that is huge. I mean, you know as well as anybody that the bond market is way bigger than the stock market. I mean, where the action is the bond market. And Donald Trump, when he went to Puerto Rico, said something to the effect of, we got to wipe that debt out. Mm-hmm. And everybody, oh, what? I mean, the government's not going to ride in and liquefy all that debt? I mean, is that a tip-off to how he's thinking and how he's going to handle the debt crisis that we surely have?
It's a huge tip-off. I mean, you can like Trump or you can dislike Trump, but he was being honest at that point. Puerto Rico has $70 billion in debt on the books. Off balance sheet is $30 billion, so it's $100 billion, $30 billion of which is unfunded pension liabilities. They have about 1 million people on the island that actually work. If you have 70 or $100 billion of debt and only 1 million people working, of course you're going to default on the debt. And what I find very striking is that Trump said, very honestly, we're going to get rid of that. We're going to abrogate it. We're going to cancel that debt. So he's telling private creditors, we're talking Goldman Sachs, he's telling pension funds and individual bondholders, you're going to get close to, if not exactly, 0 cents on the dollar. Greg, that's an explicit default on debt. And that's one of the progenitors of Pento Portfolio Strategies is that you, as an investor, are going to have to learn how to make money when governments around the world default on debt, either explicitly through a restructuring, as Trump was talking. In other words, you get 0 cents on the dollar, thank you for playing, or through inflation. Now, President Trump nominated someone called Randy Quarles as a vice chair of banking supervision. Randy Quarles is on record of saying this, that he is a lover and espouses negative nominal rates. That's the other way you default on your debt. It's called inflation. Ladies and gentlemen, please listen to me. The governments of the world, that includes the United States, Puerto Rico, Greece, China, Japan, Eurozone, they are going to default on their debts, either explicitly or implicitly through inflation. That is what's happening now, and that condition will only exacerbate as we go through time.
And are they using, and might they be so clever or crass, whatever you'd want to see, to use Puerto Rico as a little test case? Going, okay, let's light this candle and let's let it burn into the cake, and let's let it just completely collapse. I mean, are they using this as a test case? Is this a warning signal what the president may do in the future if everybody starts liquefying their bond debt?
Absolutely correct. It's what's going to happen. They also had a test case in Cyprus and in Greece. So they're telling creditors you're going to get X cents on the dollar. But these are small, isolated cases. But please don't believe for a second that the United States can ever fund its $20.3 trillion worth of debt. That's on balance sheet. We've got over 100 in unfunded liabilities, $100 trillion and a quadrillions of debt in derivatives. So we're going to have massive defaults. One of the things I mentioned on your show before, and I can't emphasize it enough, since coming out of the Great Recession, the global economy accrued an additional $70 trillion in debt. And the only way that's been serviceable, the only way this Ponzi scheme remains remotely resembling solvency, is that interest rates were taken down to 0% and below and left there for 9 years. That is ending. And I will say this, $15 trillion of phony, counterfeit credit has been created by central banks since 2008 to take interest rates to 0% and to allow people to incur more debt. It's exactly what's occurred. And also we've engendered asset bubbles of massive proportions, bonds, equities, and in real estate. that is all going to come crashing down in, I think, 2018. And let me tell you why. Now, people are like me, we understand, we believe, we know that this is going to end very badly. But we're able to sustain a level of solvency in our clients' accounts because we're not just going short the market all the time and we're not 100% in cash. But why is it going to crash in 2018? Because central banks have bought about maybe close to $2 trillion. It depends on a lot of sources where you gather the information, but about $2 trillion worth of bonds have been purchased, bonds and stocks, since the beginning of this year. And they're still buying about $120 billion of bonds and stocks per month. By July of 2018, central banks will become net sellers of debt. So they're going from buying $15 trillion over the course of the last 9 years to currently buying $120 billion worth of bonds and stocks to sellers of bonds by July of 2018. And when you have a German 2-year note that has a negative yield, and you have a Japan 10-year note that has a 0% yield, you're talking about an epic collapse in bond prices, a rise in yields. It's going to pervade across the globe, and it's going to be the moment of reckoning and truth for the global economy. 2018, watch it.
That means that rates will be going up. If they sell that debt, the rates are going to be skyrocketing.
Well, Greg, who is buying? You know, the Bank of Japan, the BOJ, now owns 60% of the entire ETF market, and they own 40% of all of the JGBs, Japanese government bonds. So they are the only buyer in town. Nobody with an ounce of sanity is buying a Japanese government 10-year bond, which yields 0 each of those 10 years. And in real terms is profoundly negative. Don't forget, the currency has crashed 30% since 2012 when Shinzo Abe took over. So you have a currency that's crashed 30%, and it hasn't really crashed completely because, well, Mario Draghi over in the ECB, he's printing money still. He's doing 60 billion euros a month. And the Federal Reserve stopped printing money in 2014, but they still have a $4.5 trillion balance sheet. When the Fed starts unwinding their balance sheet, and they're doing it this month, and it's going to grow to an annual pace of $600 billion worth of selling of treasuries come July of 2018. And they told you, this is not Michael Pento, conspiracy theory, or Greg Hunter, paranoid schizophrenic, telling you that the Fed is going to sell debt. The Fed has said that this selling of debt is on autopilot. It's on autopilot. The main function that they're going to use to control the economy is the overnight interbank lending rate, or the Fed funds rate. So unless we go into an absolute depression, the stock market crashes, non-farm payroll reports that are profoundly negative, or negative CPI prints year over year, this is on autopilot. The Fed is a bunch of Keynesian liberals who are looking at pretty much one thing: the unemployment rate, which is absolutely meaningless, Greg. It means nothing. If you drop out of the labor force, if you're not looking for a job, the unemployment rate in the United States would be 0. It doesn't have anything to do with inflation. Inflation has to do with what people think a currency's purchasing power is going to be. So the Fed's on autopilot. They're going to crash the economy just like they've done over and over again, replete throughout their history. It's coming in 2018. And you either could be all in cash or short the market and you're losing your money, or you could be one of these many people who just buy and hold stocks, and you're going to get completely crushed for the third time since the year 2000. Or you can have somebody like me in the model of inflation-deflation dynamic portfolio. The model portfolio has been up modestly the past 2 years. You can make money more safely in a hedged portfolio, and you have somebody who can understand and identify when the crisis is going to hit and will be able to protect and profit from the next 50% plus decline in stocks since the year 2000.
What is stopping Wall Street from front running this trade? Wall Street, there's got to be people listening to this There's got to be people that are an economist, a money manager like you. They're looking at this. They're looking at the same stuff. You can't manage millions, hundreds of millions, or billions of dollars like you guys all do. And you can't be looking at the same data, and they've got to be freaking out. What's stopping Wall Street from just, I'm selling, sell, front running that trade, not wait until next year?
What's going to happen, Greg? You know who's running Wall Street right now? It's not people who've been licensed like I have since 1991. It's not intelligent people who have an objective way of looking at the world and understand that you can't solve the global economic problems that were extant in 2008 by taking on an additional $70 trillion in debt and leaving interest rates at zero for 9 years. We understand that that's not a viable strategy. Who's running Wall Street now is high-speed front runners. It's robo-machines. It's algorithms. And what do they see? They see the Bank of Japan printing about $678 billion per annum worth of confetti and counterfeit credit. They see the Bank of the ECB, European Central Bank, printing $60 billion per month. They see that money come in and they front run that bid. So if I know that the banks, global central banks, are buying $120 billion worth of bonds and stocks each month, I am going to, as an algorithm, set myself up to profit from that trade. I'm going to front run that trade. That's why, Greg, if you ever ask yourself, why did the S&P 500 go from 666 in March of 2009 to 2,550 today when economic growth has been stuck at 2% in the United States since 2010? How the hell did that happen? Well, as I said, it's $15 trillion of counterfeit confetti and algorithms and high-speed front runners getting in ahead of that trade. That's all going to change next year when the algorithms are going to read sells from central banks. No buys, sell orders from central banks. They're going to front run that. And that's when you see the Japanese 10-year go from 0 to 2 or 3%. That's when you see the German 10-year bond go from 0.4% to 3%. That's when you see yields in the United States go back to 4% or even higher. Because, as I said, and this is very, very crucial for you to understand, we have increased the specter of insolvency, not only in Puerto Rico or in Greece or in Europe. It's pervasive around the globe. So if you don't have the employment to population ratio to service that debt, your interest rates should be much higher than where they are today, or even where they've been historically. And in the United States, the average is 7%. So interest rates are going to be left to the free market. They're going to explode higher, and that's going to bring the central banks back in. The cavalry is going to come in, and you're going to get the Randy Quarles of the world, whoever Donald Trump appoints. He's got 5 appointees yet. He still has to, and maybe even replace Janet Yellen. It's going to be a Trump Federal Reserve. And if you look at Randy Quarles, who's on record saying, I want negative nominal interest rates. Guys, ladies and gentlemen in the audience, look it up. Randy Quarles, negative interest rates. He's on record saying he wants them. And you can't have negative nominal rates in the banking system, negative nominal deposit rates, without getting rid of cash. So we're going to a cashless society, negative nominal rates, helicopter money. The cavalry's going to be called in sometime in 2018. That's my best estimate, around July, when the reality hits.
North Korea. I want to talk about that. I mean, Donald Trump had a meeting and he blurted out or slipped out. I don't know. I don't think he does. I think he's a very smart guy. And I don't think he says anything. I think he just made a mistake. I don't think he says anything unless he intends to do it. I think it's rarely that he makes a mistake. And He wouldn't make a mistake this being said, this is the calm before the storm. That was not a mistake.
Well, he also told Rex Tillerson, say, hey, he does have a way of communicating his every thought in public. Maybe that's smart, maybe it isn't. But he did say, hey, Rex, stop negotiating with Kim Jong-un. There is no diplomatic solution.
Yeah.
We'll take care of it.
Yeah, and then
calm before the storm. I mean, what is he? Is he the most incredible liar, or is he going on record saying, hey, we are going to take out North Korea militarily, and it's going to happen soon. It's not going to be 3 years from now. It's going to happen relatively quickly. I happen to believe him. And if you're in a portfolio Like I hear these guys on CNBC all the time. If you're in this kind of portfolio that says, I'm just going to buy and hold passive ETFs because by golly, in the long run, I'm going to be fine. And if we start a preemptive strike on North Korea's military infrastructure, which is going to bring China into the fore and Russia, because China is on record and Russia saying, hey, you do a preemptive strike against North Korea, you remove the buffer we have between us and South Korea, you've got a problem with us. You're talking about potential of World War III. And if you don't think this is possible, then you don't know your history. You've got to read your history. Man has never forged a weapon that hasn't been used many times, often. And it's a possibility. And if you're in this buy and hold passive ETF unhedged strategy, man, you're in trouble.
You know, they just leaked out a story or put out a story that South Korea has a blackout bomb. I mean, why would you, forecast that? Why would you put that out there? Oh, we have a blackout bomb. We can knock out your thing. Jim Rickards was on my channel, and I thought this was a huge bomb. When I bombed a piece of information, he said, we have, Los Alamos hasn't been just sitting there for 10 years. We have nuclear weapons that can hit with the power of a nuclear weapon. And, we don't have any of the fallout. And we could knock out all their artillery in South Korea. And Rickards is a connected guy. He also talked about a window, which we're in right now, from the 10th of October to the 21st of October, the making of the North Korean Communist Party and this naval drill with South Korea. Are you nervous right now, or have you hedged yourself extra special or done anything different?
Well, I tell you, normally speaking, I would have sold more gold than I normally would have, given the fact that central banks are in tightening mode, nominal rates are going up, and inflation is quiescent. But no, you have to have some gold. Greg, you have to have some gold. I wonder what you're going to tell the people who own Bitcoins when they release an EMP bomb or this blackout bomb, and you're running around with your laptop or your cell phone saying, hey, I promise you, somewhere in my smart, my wallet here, I have my digital wallet, I have a Bitcoin. You gotta have physical gold. You should have about 10% of your liquid net worth in physical gold that you possess directly. Cannot stress that enough, Greg.
Do you like silver?
I like all precious metals. Precious metals excite me right now. They're going to become in a massive and unprecedented bull market sometime in 2018. Forget about 10. You're going to go from 10 to 40% or higher of your portfolio in precious metals when central banks admit their folly. When faith in central banks cracks, you are going to need gold, silver, platinum, and you're going to need it in a big way because those metals and the mining shares are going to absolutely rip higher. Right now, most people believe, almost everybody believes, just buy and hold ETFs passively because there will be no problem. In fact, Janet Yellen is on record saying in her lifetime, there'll never be another crisis. In her lifetime. I wish her a long life, but unless she's going to die by July 2018, she has a real reality check coming.
Are you worried about brokerages going down? I tell people all the time, I said, the other risk that you have isn't just the banks, it's your brokerage. Having a great investment in a brokerage that turns MF Global ain't a great investment. Are you worried about brokerages going down? They're highly leveraged. They have a lot of derivative exposure, some of these brokerages, some of these houses. Are you worried about brokerages going down in the next calamity?
Well, I'm worried about the financial system as a whole. I mean, I clear through Charles Schwab. Pento Portfolio Strategies clears through Charles Schwab. They have no derivatives and they don't take any principal trades. So they're the most safest of all of these brokerage firms. But you have to worry about the banking system as a whole. You worry about not getting money out of your ATM cards. But let me tell you something. Trump is on record saying that he is going to default either explicitly, we started the show, explicitly, hey, you own a Puerto Rican bond, you get zero. More likely, the implicit default is happening now and will go full speed in 2018. And as I said, helicopter money, negative nominal rates, which means you can make a hell of a lot of money hedging against inflation and a collapse in all global fiat currencies before you have to worry about calling your broker, saying, hey, send me all my money. I have to get my cash and buy all the gold I possibly can because fiat currencies are going down. There's going to be a huge global currency reset. I want to add this too, before I forget. What the heck do you think is holding up the stock market right here? You know, when you hear the president telling his Secretary of State, don't negotiate with the nuclear power, we're going to pretty much nuke them first. You would think that would cause the stock market to go down, at least a couple of ticks. But the stock market goes up. It goes up regularly. And that all is going to end in 2018. The only thing holding up the stock market, I'm going to prove it to you in a second. People have been saying that this is an earnings-driven rally. You hear this, a global synchronized recovery and an earnings-driven rally. Here's the facts from FactSet and the S&P 500, okay? FactSet says that in Q1, earnings growth was 14%. Year-over-year growth in Q2 was 11%. Well, guess what it is for Q3? Year-over-year earnings growth for Q3 is just 2.9%. And that's not even X energy, which is where all the growth is. So you have no more earnings growth. It's very, very minuscule. GDP, if you look at the New York Fed for Q3, it's 1.8%. If you look at the Atlanta Fed, it's just a little bit above 2%. So you're still stuck in that 2% range. There's no real growth in GDP, no real growth in earnings. And the only thing you have left is central banks. And that game is ending. So if you have central banks becoming sellers at the same time that you have a high risk of nuclear war, World War III, and stocks are trading at all-time record highs, 138% total market cap to GDP, Greg, is 138%. The average is 50%. This is crazy. There's no way you could justify the level of stock prices without massive and continuous and unrelenting money printing, which is coming to end October 26th. The ECB starts their taper. They'll be out by July. They'll be down to zero. Even the Bank of Japan has, on the margin, dialed back on QE. So you'll have the ECB out, the Fed selling, and Japan maybe dialing back a little bit. Net sellers. Have I said it enough? Net sellers, 2018, July. You better be hedged. And you better not fall asleep because, hey, have the people like me who have been cautious been wrong for the last few years? Yeah, we've been wrong, but we're making money while we're doing it, but wrong because it hasn't happened yet. But just because something hasn't happened yet doesn't mean it's not going to happen. It means that the bubble is getting bigger. Watch out.
One last thing, two last things actually. Is this why, just quickly, is this why you think, Hugh Henry, the hedge fund manager, and another one just went, we can't read the market. It shouldn't be this way. He just gave everybody's money back. Is this why big hedge fund man, Hugh Henry, he's famous. He's renowned. He just went, I'm out. I'm done. I can't. Is this why people like that are giving their people money back and saying we're out?
Like I said, there's three kinds of, you're right. There's three kinds of investors. People who buy and hold are going to get crushed. There's people who know this is a game. It's a shell game. It's a three-card monte game. It's a scheme. It's a Potemkin village, and they're just in cash or short the market, and they're missing out. They're short. They're getting killed. But there's people like me who have a history, a third-party vetted history of the last couple of years, making some decent money, not an incredible amount of money, but a decent amount of money safely in a hedge portfolio. If you find somebody like that, you better hang on to them. Because that'll save you, absolutely. You need somebody like that. You don't think so now because you're just going to invest passively. You try to tell somebody, hey, listen, you really need to hedge against World War III and the end of central bank counterfeiting. You really need to protect against that. And they laugh at you and they say, well, I'm up 15% this year or 20%, depending on the index. They don't need you. That is 2008. That is late. That is exactly where we are. So the time is growing short for you to act.
And you think, one way or the other, with Puerto Rico, it's an outright, we're not getting your money. We're not going to liquefy it or inflate it. And you think either you're going to get, this deflation, inflation in the bond market. Some people are going to get zero, and other people are going to get funny money. Is that your overarching, prediction for the markets?
I'll put it this way. if you're a microcosm of the global economy, like if you're in Cypriot debt, or if you're in Greece or Puerto Rico, 70, 100 billion, we'll just write that off. You get nothing. But if you're a public pension or a private pension and it's significant in size, you will get your money back, the principal, but it will not buy you anything because they will inflate their way out of this trouble. That's what's coming. Trump is setting himself up. Candidate Trump's a little different than President Trump. Is he strong dollar, weak dollar? Is he king of debt? But he went on record. This guy went on record. You pointed out at the start of the show. King debt lover, Donald Trump, is on record saying, if you can't pay, you're going to get zero. Puerto Rico, explicit. Guess what? If you're Social Security, Medicare, Medicaid, Trump is on record saying, you're going to get every freaking penny. And the only way you could do that is you got to have people like Randy Quarles who love negative nominal rates, who love helicopter money, and you better have yourself some gold or you're in trouble.
Michael Pento, Pento Portfolio Strategies. Michael, I'm telling you, I've been off camera. I've been complaining to you that you ought to do an update on this book because this is I'm telling you, you were early here, not wrong, early, and what you said in this book is unfolding as we speak. Michael Pento, Pento Portfolio Strategies, money manager, economist, a good, all-around good guy. Thanks for coming on and spending your time to take us to school on what you think's going on right now. I appreciate it. Michael Pento, Pento Portfolio Strategies. Thanks again.
Always a pleasure to be with you, Greg.